With the widespread vaccination getting administered worldwide, it is expected that the world of trading and investment will once again rise back to its previous form, as business operations are finally getting back to normal. Whether you are a new or veteran trader and investor, it is indeed the perfect time to find the best stocks out there that took a hit from the pandemic. To help you with your plans, we are here to present you with the top 10 stocks predicted by experts to take a significant leap soon. Before we start, be sure to support the Stock Monster channel by smashing the like and subscribe buttons. You could also ring the notification bell button to get notified of our latest uploads regarding the trends in the business world. Before moving into the first stock on our list, please note that the stock prices indicated are May 26, 2021. Without further ado, let's get started. The first on our list is Sirius XM Holdings, stock symbol SIRI, at $6.04. Sirius XM has been the only satellite radio provider on the market since the merger of Sirius Satellite Radio and XM Satellite Radio in 2008. However, complete market control is profitable only when the market is profitable. With auto sales declining throughout early 2020 and millions of Americans stuck at home, Sirius hasn't benefited from its position. The stock price has dropped 15% in the last year as a result of this. While advertising revenue fell 34% in the second quarter, it lost only 6% year over year in the third. Meanwhile, year over year subscriber loss stayed unchanged at 1.7%, demonstrating that Sirius is maintaining its subscribers. Sirius is well positioned for a return, with vehicle sales increasing and vaccines allowing people to get back on the road. Second, Viking Therapeutics, stock symbol VKTX, at $5.23. Viking Therapeutics, for example, is a fantastic speculative investment with the potential for significant gains if the FDA approves the company's therapies. VK2809, Viking's big concept, is an oral medication for lipid illness such as non-alcoholic steatohepatitis, NASH, and fibrosis, which presently have no effective therapies. VK2809 is currently in Phase 2B testing, and with an addressable market of several $billion, investors are keeping a careful eye on the outcomes. Investors will have to wait through quarters of low profitability. Viking recorded a net loss of $9.3 million in the third quarter, compared to a net loss of $5.7 million in the same quarter last year. Higher R&D spending, on the other hand, resulted in a more considerable loss, a trade-off that may benefit investors in the long run. Third, Infinera, stock symbol INFN, at $9.46. Infinera is a high-tech firm that sells optical transport networking equipment and related software and services to telecom service providers. It is a communications infrastructure firm that helps institutions send massive volumes of data across long-distance fiber optic cables while also optimizing transmissions by offering software, data, and analytics. According to experts, Infinera's long-term performance is impressively consistent. The business might see a nice bump of roughly 6% in total sales this year, allowing it to finally make some significant operational profits rather than hovering about break-even. It might be a specialist industry with a lot of jargon, but a cheap stock like Infinera has a lot of appeal in this digital age. Fourth, Cronos Group, stock symbol CRON, at $9.46. Cron stock is an appealing name among equities to purchase now that cannabis stocks are rebounding. The stock has risen by 63% in the previous 6 months, and it appears that the upward trend will continue. The corporation already has a foothold in the United States, Canada, Germany, Australia, and Israel. As a result, the firm has both geographic and product variety. Cronos is in an ideal position to capitalize as the worldwide legal cannabis market gets pace. Cronos is also exploring preclinical research cooperation for acne, psoriasis, and wound healing treatments. For the corporation, further development in the realm of medicinal cannabis might be a game changer. Fifth, Kinross Gold, stock symbol KGC, at $8.10. As inflation rises, it's a good idea to consider investing in precious metals. In the recent past, gold has been trading in a range of sideways to lower prices. However, it appears that the precious metal is on the verge of another significant surge. Exposure to gold mining equities is one strategy to profit from increasing gold prices. It's worth mentioning that the current output is forecast to remain at the same level as last year. On the other hand, gold output is predicted to increase to 2.7 million ounces next year and 2.9 million ounces in 2023. As a result, top line and cash flow growth are expected to be significant in the following years. KGC stock is consequently one of the best stocks to purchase at the moment. As we approach the second half of our list, it is the perfect moment to take a sip of your favorite drink while watching this video. If you haven't liked the video and subscribed to our channel yet, now is also the perfect time. Let's have a recap first before we continue with our list. Here are the first 5 stocks under $10 that everyone should never miss out on. Sirius XM Holdings, SIRI, at $6.04. Viking Therapeutics, VKTX, at $5.23. Infinera, INFN, at $9.46. Cronos Group, CRON, at $9.46. And Kinross Gold, KGC, at $8.10. Moving to the 6th stock on our list, we have GEVO, stock symbol GEVO, at $7.56. GEVO is a corporation that develops renewable chemicals and advanced biofuels as alternatives to petroleum-based products. GEVO stock may benefit from the Biden administration's aim for improved infrastructure and greener energy, which is already a key area. GEVO stock is on the speculative side of the spectrum, even though the core business shows promise. GEVO barely made $420,000 in sales in the 4th quarter of 2020. Still, with the country in desperate need of green solutions, GEVO may be worth investigating. 7th, Barnes & Noble Education, stock symbol BNED, at $7.49. Because of the popularity of digital interfaces and contactless solutions in academia, Barnes & Noble Education had a solid increase due to the COVID-19 pandemic, with sales dropping 18% year over year to $412 million for the quarter ended January 31st, 2021. The corporation has its work cut out for it. However, if normalcy returns, BNED stock should continue to gain pace. 8th, Earthstone Energy, stock symbol ESTE, at $9.38. Earthstone Energy, an independent energy firm focusing on the development and operation of oil and gas holdings, was one of the industries most hit by the coronavirus epidemic. However, since the most recent employment data, ESTE has been rising, signaling a likely recovery of consumer activity and travel. It couldn't have arrived at a better moment. Earthstone had $144.5 million in revenue in 2020, a decrease of more than 24% from 2019. 9. Nokia Corporation, stock symbol NOK, at $4.95. Nokia's stock surged significantly through August as prospects appeared for the business to assist with 5G rollouts in Western countries that had opted to turn against big Chinese competitor Huawei. In September, the company lost a $6.64 billion contract to build and manage 5G equipment for Verizon Communications, VZ, and the 3rd quarter results report provided little respite. Nokia's incoming CEO Pekka Lundmark will have his job cut out for him. To his credit, he has a strategy: reform the corporation and concentrate on business division where it can flourish while removing dead weight. These suggestions won't reverse Nokia's woes overnight, but they're a start. And with shares this low, taking a bet on Nokia won't cost investors anything. To close out this list, we have Fat Brands, stock symbol FAT. Fat Brands, which owns Fatburger, Buffalo's Cafe, and several other fast casual brands, has been beefing up in preparation for shop reopenings over the last year. In September, Fat Brands purchased casual restaurant operator Johnny Rockets, significantly tripling the firm's revenue and giving Fat Brands a combined presence of over 700 outlets throughout the world. In addition, Fat established 45 additional restaurants in 2020 and aimed to build another 12 by the 4th quarter, which is more than the firm did in 2019. Fat has made some significant steps in what has essentially been a lousy year for the restaurant industry, positioning it for success in 2021. Fat is an excellent, inexpensive stock to purchase because of acquisitions and new restaurants, as well as system-wide revenues that are slowly but steadily growing. With the list of stocks under $10 worth investing in, we hope that we've helped you fill your investment lineup. Even though the previous years were harsh for the business world, they taught us that dwelling in the past will not do any good for trading and investments. Instead, adjusting our visions and searching for the rising businesses to invest in is the perfect thing to do during this time. If you enjoyed watching this video, be sure to leave a thumbs up. Also, smash the subscribe button and ring notification bell button to stay updated with the latest happenings in the business world only on the Stock Monster channel. Thank you for watching, and see you in the next Stock Monster videos.